So guys, anybody that I'll start the lecture now. So anybody that has any question or something, you can just raise up your hand, then I will mute you, then you can ask any question that you wish or that you want to ask. So let me just go straight to the point, sure. So guys, we have week one forex trading. So people might be asking, what is forex trading? So how does forex work or something like that, you understand? So briefly, sure. So without waste of time, we are going to spend 1 hour as planned, you understand? So we have the meaning of forex is that forex trading is the it's like exchanging, you understand? It's like exchange, like PAs. You should be trading PAs, two PAs. So you are exchanging like one PS against another. That is forex. So unlike crypto, because I in the group I see that many people choose like crypto, some choose forex or something. So forex and crypto are somehow related because they all include trading. We have different type of trading. We have swing trade. We have solid stock trading. We have forex trading. We have crypto. So there are many like that. You understand? So, but what makes people like forex is that it's look professional. You understand? So you only trade in a working days, so Saturdays and Sunday, and for weekends, because those people that trade as some people that are financial like central banks or some you understand, so they only trade in working days, so they doesn't trade in maybe weekends. So that is forex. But unlike crypto, you can trade anytime you want. Just go into the market and analyze your market and just jump into it and just do your analysis and do a trade. So that is the difference. So now we are talking about forex. They say forex is a foreign exchange. You understand? So that is what I'm saying. Is a foreign exchange, like trading is the act of buying and selling currencies to profit from their changing value. It's the largest financial market in the world with a daily turnover exceeding 6 trillion. Unlike stock market, the forex market operates 24 hours a day. So that's what I said earlier. You understand? So it's like buying and selling of currencies, profit for their changing value. So you understand? You might not understand now, but the more we are moving forward, that is the you'll be understanding more. You understand that deep. So that is it. Just have to be patient and just have consistency. I believe that you understand more better very soon. So now like this, we knew that forex is an exchange. You understand? We are exchanging. If we say that we have two pairs, like what are pairs? They are currency. So the reason why we call them pairs is that we are trading individually. You understand? Like we have two pairs combined together. So that is why we call them pairs. We have two things together, then we are trading them individually. Maybe we are trading this one and this one versus this one. That is why we call them pairs. You understand? So that is the reason. So now like this, we are exchanging. Is the trading is the act of buying and selling currency to profit from their changing value. It is the largest financial market in the world with a daily turnover exceeding 6 trillion. Unlike stock market, in the forex market opens 6 24 hours a day. So the reason why forex is different from stocks is like, you know, those people, they are like investors. You understand? They have company like Apple stock. You understand? We have Amazon, like there and so on like that. So you understand? There are people that trade stock. Just have to invest. There are people that invest with huge money. You understand? They invest in a company if they believe, if they trust it. So they will invest in with their money. You understand? Believing that the people will support the market, they will support the company so that it will rise. So imagine investing. The more they invest, that is how the market will goes up. You understand? So if, if they invest in it and then the market goes up, so we trader that we use application to trade, we are called retail traders. You understand? We are not the real traders. We just retail. You understand? So now like this, if they invest and we see that there are opportunities, you understand, we follow the news, that is fundamental analysis becomes to get. So you just have to be patient. So um if they invest, then our own is just to trade and then follow them and say that okay, the market is going up, you understand, then we just buy. The market is going to sell and then we sell. So that is it. We just follow the market. That is it. So the market doesn't care about anybody, who you are or something like that. So it just goes to its own direction and you can make money from the both sides. You understand? You can make money from the both sides. Either the market is going up or it's going down. You understand? So that is different. So let us just move forward without wasting of time. So we have talked about all this. So we trade only 5 days in a week. You understand? So they are talking about history of forex. Which forex gets origin say. So we talk about, here comes Bretton Woods agreements in 1944, stabilized exchange rates globally. So they establish a exchange rate globally. You understand? Because you might see that nowadays there are some people that do this as a business. You understand? They'll come to Nigeria just to buy dollar and then go to another country and exchange it and come here back and to change it back to naira and then they'll make more money. So that is the difference. So us like this as a trader, retail trader, we don't have to go to another country just to buy and come and sell it again to make money. No, we don't do that. So that is the difference between us. So now like this, the US in 1971 left the gold standard, allowing currency to float freely. So there is in forex trading there is a pair called gold. Gold is like it's not a currency normally, though, but it is like forex because we are trading it with the currency pair, which is dollar. You understand? So that is the difference. You understand? This how the gold, it is different. You understand? It's not like the other pairs, like you'll be seeing that Euro USD or USD JPY or something like that. It is different. You understand? So that is it. They left the gold to stand, allowing currency to float freely. So gold now like this, you cannot trade gold as you wish. You understand? So there is no any problem like um maybe the price is falling or something like that. People just walk and come online. So now like this, you know that there are some times I will see that some people will go to the forest or something like that just to go and mine gold and come and sell it in a short price. You understand? Short price that it isn't even profitable to them. You understand? But you like this, you can just make a huge money within a rise and fall of a market. You understand? So that is it. So forex trading is a place that you can make money financially online without stressing yourself. The only thing you just need is just patience. Patience, you understand? Patience is just the key. But believe me honest, if you have patience and you have consistency and you believe in yourself, you will later make it. So that is it. So now there is in you see that they invest in 1971 when they left the gold to stand, allowing currency to float freely. So in late 1990th century, so online trading platform opened the market for retail traders. As I said earlier, we are the retail traders. You understand? We are the retail traders. So they open application for us that okay, it's not everybody that can go and mine or buy this thing. You understand? You cannot even go to market because there are some places that some countries that they don't even have gold, but they wish to buy and sell those. You understand? So they will just that is the advantage. So the online trading platform will help them so that they can trade online freely. You understand? Without stressing themselves or something like that. So they now ask, here comes, they say, central bank, who are the participants? Who participate in forex trading? You understand? So here comes, we have a central bank, you understand, the influence price through interest, price rates, and policies. You understand? We have commercial banks engage in forex as part of day-to-day operation. So we have corporations, the trade and the trade to hedge international business rates. So here comes retail traders, individual traders using broker to access the market. So here comes from our side, we are retail traders, you understand? So we trade individually using a broker. So you understand? So we come to it side, don't worry, we'll soon come to it. I'll show you how to trade with a broker, you understand? So how to do analysis with trading view and then place trade. But firstly, the reason why I'm doing this is that you can see that we are not plenty online, so there are many people that doesn't attend this class. So that is the reason why I just have to do this, you understand? So I'll drop the handouts one by one after the class. So don't worry, maybe if I skip some things or something, you can read it so you can understand it more better. So now like this, we are talking about market session. You see, like unlike cryptocurrency or stock, it doesn't have session. It's like if you are working in a bank or something like that, they'll give you a time that okay, this is the time you are coming, you should come to work, this is the time you are going to close or something like that. So that is how we have it in forex trading also. We have session that we are advised to trade, you understand? Session that we are advised to trade. So we have we have crypto, um we have slide Sydney season open the trading days. We have Tokyo session, also called as the Asian session. We have the London session that has most volatile due to large capital. We have New York session, or we have overlapping with London creating high volume. So let me just explain this one by one. So this Syrian session opened the trading. You understand? Maybe on Friday, you see that the market will close by 12 p.m. You understand? GMT. You understand that? So it will close by 11 p.m. because you know that our time is not the same with Nigerian and US this thing. So I'll come to that. That is time frame where I'll teach you how to calculate time. You understand? In respect to those countries. You understand? So now on Monday, you see that in the midnight, the market will be open on Monday. You'll be wondering, most people are buying or selling of market in this time. You understand? So there are people online that those times they are in the morning, you understand, while we are still in the evening. So that is it. It opens the trading for the day. You understand? That is Syrian session. So we have Tokyo session. They also call this as Asian session. So we are not advised to trade at this Asian session and this Tokyo session, which is Asian session, because there are more people are not buying market at those time. You see, most especially it is in the night. You understand? It is in the night. So we are not advised. It's not advisable to buy or to trade at that time because it has low volatility. But you see, this London session, it is most advisable to trade at the London session because it has high volatility due to large capitals. So there are people that we call big boys. You understand? So they trade with high money. You understand? They invest with huge money. So that make the market goes up or down. You understand? Us like this as a retail traders that we trade as a broker, we don't have the money. We don't have the money. Ba ma da kuɗin da irin za mu sa mu tura market sama ko kuma mu tura shi ƙasa, ba ma da shi. We don't have the capable. We are not capable of pushing the market or deciding whether we should put the market up or down because we are using low money. So that is it. So as for New York session, we have overlapping. We can also trade at New York section because immediately the time that London session will soon end, that is the time New York session will start. You understand? So that is the difference. The time that you end, the New York session will be ending. That is the time London session and the London session will be ending. Sorry. So that is the time session and New York session will be coming in. So those people that are in New York, so they have high money to invest. You understand? And then the London session has not finished by that time also. So I think London session is opening by 8 a.m. and then 8 a.m. in Nigeria, and you understand, in the money, having the money that those people will go to work and something like that. Then it ends like 1 p.m. and then the New York starts at 1 p.m. and then end at 5 p.m. in the evening. So that is the difference. You understand? So you can trade at all those times, especially 8 a.m., 10 a.m., 11, 1, 2, you can trade 3, 4, 5, then you can quit trading because at that 5 a.m., that's when the ASEAN session, you understand? That is when it's coming. That is Tokyo session, that is when it came in, you understand? So at those time, we don't have high volatility or something like that. So he I supposed to download all those images to as description box. I couldn't because due to time, you understand. I'm also busy. I just have to make a time just for you guys, you understand, just to help each other. That is it. But don't worry, by next week, inshallah, we do better. This is my first time having class with online class, you understand. So you just have to bear with me because I've never witnessed this thing. So just have to do research and do this thing. Anytime you just have question, you can just ask me. You can raise up your hand, so I'll check it then and I'll answer you. I will unmute you, sorry, so that you can be able to talk. So you can ask any question. Then we are free. I'll answer it, inshallah. So now like this, we have an image description. You understand? A 24-hour word plot showing the overlapping between sessions, especially the London New and New York overlapping. So, as I told earlier, there is the time that the New York London session will end. That is the time New York is coming in. So there is an overlapping. So, coming as in like, let me just say, I invest 100 million. So, at the time that we are closing our company that invests, that we are trying to close, then some people now come again that they want to invest. You see that the market will have high volatility. Maybe either they are withdrawing or they are investing. So you see whether the market is going uptrend, it will continue going, and then either the market is going downtrend, it will move more higher. So that is different. So it has high volatility. So that is it. Inshallah, we'll finish this handout by 9:30. Then we have a break and then continue the second chapter by 9:30 to 9:35. Sorry. So we have a break so that I can inform the rest people that we are having the online class so that they can join or something like that. So now we came to currency pairs. So as I talk about pairs, maybe if you will remember, I talk about pairs. So pairs are like let me just say, how will I put it? Like the things we are trading, the currencies we are trading. So I told you that we cannot trade it. One currency we cannot trade it. So unless we can only trade two currency. So that is why we are trading it in pairs. So that is why we are trading it in pairs. So now like this, we have different type of pairs. We have EU, we have JPY, we have USD, we have Nasdaq. So all those ones, they are pairs. You understand? So they are pairs. They are currency that are used in different countries. You understand, guys? So now like this, we cannot trade only euro alone. You understand? Because we are not in euro country. And if we were to trade euro, what will we know whether euro have gained this thing? You understand, whether it has gained value or not? What will we know? That is why it comes in two pairs, in form of two pairs, where you can trade. When you see that euro is maybe gain strength, you understand, and dollar is weakened, that means we are going to short euro against USD, so that by the time dollar is going to rise, so you'll be able to gain more profit. So we come to the place that you see how we make money, how the money we make will be calculated pips. Don't worry, we should come there very soon. So we have major pairs. There are different type of pairs that we have. So as I said earlier, pairs are currency. So currency are the money we are trading, you understand? So pairs is just like different type of currency. Let me just put it like that. So the different type of currency that we are trading. So let me just say like this. So major pairs involve pairs that have dollar, USD, and the world strongest currency. You understand? USD is the world's strongest currency because anywhere you want to go now like this, you will see that they are using USD. Most of the countries in Africa, you see on in the world, you see that USD is reigning. You understand? They are using USD anywhere you go in the world. Like you don't have their currency, you just have dollar, you can even use it or exchange it, you understand? So that is the difference. So major pairs are pairs that have USD, you understand? Like you just see euro versus USD. That is the meaning of this slash that you see. This one, this slash, that is the meaning. So if you just see euro slash USD, that is the difference. So that means we are trading euro against USD. So that is it. So now like this we have minor pairs. So they say minor pairs don't include USD, but include major pairs. So now like this, you see those minor pairs, they don't include USD. So they are like pairs or currencies that are major, but they don't include USD. Like USD JPY, you see that the JPY is major because it has USD, but now we have GPP JPY. It is minor pair because it doesn't have USD. We are trading USD against JPY, so that is the difference. Some people might ignore this class, but because they think that it doesn't have any meaning to them or something like that, but seriously, they are mistaken because this class, it means a lot for them. If you miss this class, you don't understand many things. Just one thing about Nigerians is that guys, they just need fast money, so they just want to be rich fast. You understand? Which is one of the mistakes I've also made before. So that is why I say I will help you guys. I will lead you, inshallah, show you the way so that you not fall into victim of all those mistakes that I fall onto. You understand? So that is the reason why I'm starting afresh. You understand? If I was to start, I'll just start from technical analysis or something like that. But I just have to waste my time just to explain all these things so that you understand more. You understand? So as we were saying, you understand, we have minor pairs. They say minor pairs uh, are pairs that doesn't include USD, right? So that is the difference. Major are pairs that include USD, while minor are pairs that doesn't include USD. That is the difference. You understand? So the same major pairs are exotic pairs, include one major and one developing nation currency. So exotic pairs means one major, which is example like euro, and then one developing nation currency. Understand? So that is it. So now we are giving an example of one major pairs. You understand? Oh, sorry. So we have an example. We are given Euro JPY. So the Euro JPY is, let me just say, sorry. Euro USD, you understand? So let me just say Euro USD worth 1.1 thousand means 1 euro. The price of euro is now 1.1 thousand. You understand? So mathematically anything above this after this point, decimal point doesn't reach one. So that means let me just say 1.10. You understand? USD, which means 1 euro is worth 1.10 USD dollars. So that is it. So um we'll be using this to complete our pips in the next this thing. So as I said, we'll be ending up by 9:30 for a break. So remain 2 minutes now. So let us just conclude and then move to the next um paragraph. Sure. So in conclusion, week one established the foundation of forex trading. So now like this in this week one we gain what is the meaning of forex trading, what is forex itself, so which means exchange of currency. So that is it. You might be a forex trader and someone just come, like people that like disgrace, so they just like to disgrace you and ask you are a forex trader, okay, what is forex? So you just be fine, you don't know what is forex is or something like that. But if you know what forex is, so guy, just pass that shame, you understand? So that is it. So some people might skip this class, but they are on their own channel. So we understand what forex trading is now. You understand? We are exchanging. That is it. We are exchanging currencies just to make profit. So that is it. Um Now like this, inshallah, we'll be diving into technical and strategic asset aspects. You understand? So these where some traders want us to start from. You understand? But Alhamdulillah, we have finished the first part for those that are interested. So now like this, we move to the next part. So let us just have a break and then we continue. Bye.